We've patiently been waiting for SR CounterTrend II to take some trades in this low frequency environment, and we get one in silver today. We have one going. Front month is May, so you see this sell-off in silver. Got long here. It has a $500 profit target. No slippage on the entry, so it was a nice entry. We will see how this trade ends up today. It could hit its profit target, could roll over, hit its stop, or it could close somewhere in between because we get out at the end of the day. And so that is the SR CounterTrend II live trade on my VPS that I'm showing you. I'm going to show you another setup here. This is my research platform. So you see I have delayed data on my research platform, my desktop. The other one is the VPS with the live data. I pay pro data fees. It's $125 in exchange, and so I save on that one on my research platform. I just use delayed data, except for stock indexes because I have to. Some of my strategies use the NYSE tick, and you get the error. You may not mix symbols of different delays if you don't have real-time data. So I have to pay real-time data for the stock indexes in NYSE, but everything else is delayed. But I want to show you the strategy for the E-mini S&P SR CounterTrend II version 2. And this is going back to 9/5/2006. The reason I show this back to 9/5/2006 is because that's when crude oil starts. Intraday electronically trading is 9/5/2006. So kind of synced it up. A lot of these reports are going back to that time period because that's when a lot of the markets start trading predominantly electronically instead of in the pit session, almost 12 years ago now. So the E-mini S&P though started trading electronically in 11/1/1997, so 20 years. So I want to show you the E-mini S&P going back 20 years on this SR CounterTrend II V2. It's a secondary setup that we have, and these are not one-off reports. These are I'm going to click on gold here. Gold uses the exact same parameters as E-mini S&P, and you see that they're on a different session that resembles old pit data or high volume session, the day session. And here's the E-mini NASDAQ. And so these are just some of the trades. Here's crude oil. And so you have crude oil here. But back to the E-mini S&P, $93 average trade profit. How does this test back to 11/1/1997? I'm going to scroll back and show that report. So we went back to 11/1/1997, and you see here SR CounterTrend II V2 on E-mini S&P still does well. The average trade profit is 71 over 20 years. It's 93 for the last 12 years, and you get 71 now. So you look at the equity curve, it's better in recent years than past years, but still nice performance overall, net profitable, positive edge on this strategy. So I wanted to show you that it's important to have a strategy if you're going to trade, and you can test these things to make sure your strategy is stable. This is the best strategy I've developed, in my opinion, in 20 years of doing this, 20 plus years of doing this, because it tests so well in so many different markets and different time frames. And I typically use market internals on the stock indexes, but I'm not using any market internals. So that's the update for today. Something I wanted to show you that I had not tested yet is going back 20 years on this SR CounterTrend II V2. So many things to test, and I will keep you updated.